All right, we should be rocking and rolling. Let's go ahead and get this stream started. Let me know in the chat that I'm coming through loud and clear if you don't mind. In the meantime, welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on April 3rd, 2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. What's going on? We got triple dumps in the chat. Good evening to you, my friend. Crypto Deli says, what's up? Loud and clear. All right, excellent. Okay. So let's go ahead and just jump right in. Obviously, quite a bit going on. So we saw the end of the month print, went into a nice little weekend. Saw our, we saw a daily close, a weekly close, and a monthly close in the last couple of days. And then, of course, we have our quarterly close as well. So like always, what's going on, Ralph? Good to see you. Like always, we're going to be basically focusing on where to position. So obviously, we're always looking for the next big trend so that we can get in front of it, capture the majority of it, and then get out before it is over. So we don't want to call the absolute bottoms. We don't want to call the absolute tops. The focus, obviously, the name of the channel, is trend trading. So we want to make sure that we capture all that meat in the middle. We want that 80%. We don't worry about the first 10% or the last 10%. We just want the easy, floating with the river, floating on downstream, 80%. So that being said, we know that we're going to see trends changing in these markets. So what we want to look at is things that have been strongly trending in one direction or the other for multiple, months or quarters. So obviously, if something has just been kind of oscillating around, we don't see any resolution necessarily in the direction that it's headed in. If something has been going absolutely parabolic for the last couple months or quarters or, whatever, we can look for a potential reversal going into this quarter. The same way that if something has been just, melting down for days, weeks, months, quarters, years, that's an opportunity for a potential reversal as people rebalance in or out of those areas. So that's what we're looking for. Ralph says, thoughts on sell in May and go away? Statistically speaking, Ralph, it kind of goes either way, man. Like I've seen statistics that say it actually works. I've seen stats that say it doesn't work. And then you can start throwing in stuff like all kinds of other factors and coming up with, percentages and whatnot. I mean, the fact of the matter is, I think there's definitely less volume certain times a year. There's definitely certain months that tend to perform better than others. But I don't know if I would say so much as sell in May and go away, because there's always going to be some opportunity. I think part of the whole sell in May and go away is sort of like, okay, we finish out a quarter. Obviously, everything's crazy at the end of the year. Everything's crazy at the beginning of the year, and then you finish out the first quarter. And then it's like, all right, let me make sure and I take some time for myself, for my family, for whatever. So maybe you're a little less active, trading or making moves, or a little less aggressive in the markets. But I definitely don't think it's like, okay, just pull all your money out and just sit on the sidelines for the next, quarter. I don't agree with that. So there's parts of it that make sense. Statistically, you can pull a bunch of different stuff up that says it's good or bad. But overall, I don't like the idea of it. Also, it depends on the person too. If you're trading just kind of on the side sometimes, or you feel like you're already well positioned in or out of the market for what's going to happen, or you just want some time, without sleepless nights or anything like that, that's perfectly fine for you. But if you're a full-time trader, obviously you don't want to just take 3 months off and not look at a chart or whatever. I'm always looking for opportunity. So that being said, we're seeing some potential opportunities. We're seeing some potential shifts. I think some key markets that we're going to continue to or start to really pay attention to is, like I said, ones that have been strongly trending in one direction or the other, to see, are we likely to see continuation, or are we likely to see reversal? So that's what we're going to focus on today. We're going to look at, we're going to look at the Treasury, the DXY. We're going to look at the random indexes that we always look at, the main ones, a couple sectors. We're going to look at some, foreign stocks as well. We're going to look at a couple of tech stocks and the leaders, the big boys. We're going to look at some commodities, including the pot stocks, and we're going to talk about why it's so important to take profit. I'm sure most of you guys already know. Gold, silver, platinum, palladium, And then I've got a couple of the main cryptos right now. I'm not going to look at a ton of altcoins today, not because they're not good or anything, but you know, if you guys want to put in requests for Wednesday or whatever, we can dive into a bunch of altcoins. I just have a couple requests we're going to take a look at, a couple of my personal favorites that we haven't looked at on stream very often. And I may or may not be being sarcastic right now. I guess you'll have to wait and see what the names are. But that being said, we're going to look at a couple of those. We're going to talk about why some cryptos look really good right now, some look really, really bad right now, and then also like the potential that this trend is going to soon pick a direction, and then what direction it looks like we're going for. So let's rip right through, get rolling, and see what's up. So to tell you the truth, I'm probably going to just stop covering the 210 spread, and we don't really need to talk about the inversion anymore or anything like that, since you know literally everybody else is talking about it now. So I don't think there's any reason really to talk about it any further. You know how I feel about the 10 at this point in time. This is the TNX, which is the yield on the 10-year. You know, we've hit resistance here. This is where we expected to run into resistance, and I honestly think this is going to cool down and see at least like a temporary reversal in the meantime. We see a hard sell signal. We see a bunch of red histograms. We tagged a macro Fibonacci level perfectly after a massive breakout, and we're basically at the cycle highs. So there's not really a ton to see right here. I expect it to really just kind of cool off and go sideways for a little bit. And then if we switch over to the TLT, which this is the 20-year treasury bond, you know, or the way you can trade it, not the actual yield, we see we're coming out of the bearish control zone, getting the hard buy. We're building momentum, multiple green histograms. We're crossing over the slope line and flip that slope line over blue already. You know, we're at support, which this is not a super strong support, but it has played out very well, this green support down here. And it was also our target. So we've hit the target. We broke down from key areas. We're coming back up. We're now retesting the breakdown level, which is the 0 basically, you know, from the top of the Rona spike to the, you know, bottom down here in March of 2021. We had a nice little pushback up to the upside, and then we melted down from it. Now we're retesting it as resistance. So one of two things is going to happen right here, and we know what those two things are. We're either going to find resistance and get rejected and break down from this level, and bonds are going to completely melt down, yields are going to completely spike, and you know we're going to see some craziness in these markets, or we're going to consolidate at this support, get a, you know, counter trend move back up, potentially retest like the 200 exponential and simple, you know, possibly somewhere around like 142. I don't know which one's going to happen, obviously. It looks to me like we're probably going to get some kind of bounce and consolidation here. Now, what happens after that? You know, does it consolidate around here for the next few months and fill out this descending, you know, resistance line? And then do we get a break closer to like March of 2023? And in the meantime, we're just range bound? It's possible. It is honestly possible we see this just chop around sideways in this range between like, you know, 128 and like 145. It is entirely possible. But what I'm looking at right now is, and what I'm seeing is, we have this long-term green, not super reliable, you know, support line right here. And then we have, and I say it's not super reliable because it's basically like, it's like an arc. It's not a straight line. It's not a horizontal. It's not even an ascending line. It's like an arc curved line that uses support. So it's the least reliable type of line we could possibly have. Inside of that pattern, we have basically from our peak right here, multiple touches on the top of this descending channel. And then we have arguably based on closes on the daily, multiple touches here on the bottom. And now we're basically, you know, we've seen a couple bounces here at like the heart line, here at the heart line, you know, here at the heart line. So I think this channel is probably the most realistic and like reliable support that we have right now. Now we also have like this ascending channel that goes way back in blue, and then we have the green heart line in that, which we have broken down from. So I would expect that to act as resistance if we get back up to it towards like the green dots right here, or dashes I should say. I expect this to act as temporary support right now, but the least reliable. And then I expect the descending channel right here that we're acting in to act as pretty heavy support. The heart line is always a little less reliable than the inside and outside like resistance and support, even though the longer the time frame, the more reliable it is. So this heart line should be pretty reliable because it's a super long time frame. This one, you know, the heart line is going to be less reliable because it's only like a couple year old trend, you know, basically since the Rona top. But the heart line will be less reliable than the support and resistance. So I expect basically these white support and resistance lines to act about as reliably as the green heart line here, and then less so I expect, our descending orange heart line, and then the absolute least reliable is probably this, green one that we have right here. Now the most reliable, if we look on the macro, is way down here at the blue support or the blue resistance. But I don't think we're headed to the to the resistance anytime soon, because that would be a breakout of our descending channel. I think the most likely area we go to is eventually, whether it's after a bounce up here, whether it's after a little bounce, whether we just break down right away. But I think this is still our macro most reliable target. And obviously, that's my target, which is $118. Now a breakdown from this little, basically we have a descending triangle right here that we've been acting with, but we only really have one touch on the bottom, and it's kind of like more of a, head and shoulders. Now I like the symmetrical, like left shoulder and the right shoulder to be about the same size. I obviously drew this way in advance. Now in hindsight, we can look at it and we can say, okay, maybe this shoulder should have been right here. Maybe this part of the shoulder should have been right here. And then maybe this was all just part of the head, the middle part. Now it's not very symmetrical. It looks kind of mutated, but there's still potential. But the right shoulder is much bigger than the left shoulder. It's not very symmetrical. So for me, not that reliable. But we did technically break down from it. We do technically have, a pretty solid horizontal support right here. So if we don't reclaim this support level and keep chopping around in this range, I think there's a very strong likelihood we end up down here at 117. If we do reclaim the support level, I think we just chop around inside this range. I do not see us leaving this descending channel in white anytime soon. And I think we'll get a pretty big clear signal when that's going to happen. Now, talking about what we were talking about with trends though, let's pay attention to what's going on here. How long have we been in this downtrend for? Well, we peaked out here in March of 2020. So we're basically, at the 2-year mark for this downtrend right here. And we're putting in new lows. So there's nothing telling me this trend has to end right now. But after 2 years in a downtrend on the bond market, is it possible that, we reverse here and actually start putting in new highs? It is possible. So we do want to pay attention to that. And the best way to do that is go to a longer time frame. So let's look at our longer time frame here on the weekly. So we have obviously lost, we still have the blue slope on the TJD TDMACD, but it's all red histograms, all red momentum. So we, basically just hasn't rolled over yet. In my opinion, it's just lagging, but it's bearish. And then here we're down in the bearish control zone. So the bears are in charge, but we're sort of putting in like a double bottom right here. And if we exit the bearish control zone and cross above the zero line, these are going to cross. And actually, that's probably a strong place to enter the bond market. We see the last time that happened, we went on a pretty nice rip. And that rip lasted basically from when we left the bullish control zone and we had the hard buy already. That was April of 2021. And then we actually didn't peak out until November of 2021. So that was a nice multi-month rally, that was basically a double bottom led to a double top. So is it possible that that's approaching on the weekly? I think that's possible. Where would that likely take us to? I think that would be our retest of the breakdown. So we have clearly lost the 200 exponential and it has flipped to the downside. We have lost the 200 simple. We got immediately rejected off of it and then we pushed down lower. So I think there's a high likelihood possibility that at some point in time in the near future, whether it's the next few weeks, months, over the next 1 or 2 years, probably less than that, we come back up here and retest this. So I do expect a retest of like that 141 range. And then if we flip on our indicator oscillators, that's basically, back inside of technically the breakdown area, but still very much inside of our descending channel. So that wouldn't really violate anything. It's not going to make me suddenly bullish on the weekly or anything like that. It's just what we typically see in these markets. And just for an example, we come down here, we retest the 200 exponential and simple, we reclaim them, we kind of put in like a little head and shoulders right here, we break down, we retest the 200 exponential and simple a couple times, and then we go lower as it flips, both of them bearish. So did we already get our retest? Do we come back up and do one more retest? We don't know for sure. I think likely we come back up and try to save this trend, because the way we look at these 200 exponential and simple is on the time frame we're looking at, which is the weekly. If the price is over the 200 exponential and simple, we're in an uptrend, but you're paying above market value for this. If the price is below the 200 exponential and simple, we could be in a downtrend, but you're getting a deal at least on this. So right now, essentially, the average is 141, and it's priced at 132. So you're basically getting a coupon for $10 off. So it's like, hey, bonds are on sale right now, $10 off. And it's like, oh, that's not a bad deal. You know what I mean? Like 7% or whatever. So maybe I'll snag some of those up. Could they go on sale for 20% off? Sure. Could they go back to fair value? Sure. So could go either way right now. I wouldn't be surprised to see either direction, but I think it's likely in the near future that we do start to trend back up and at least get a retest. Because what happens is people buy the dip when it goes underneath these, expecting it to bounce back up, expecting the area to get reclaimed. And then when it doesn't get reclaimed, they push the price back up so they can exit their positions at break even, which is fair value, 200 exponential and simple. Or people buy and then expect the scalp back up here, and then they sell at resistance because we're potentially entering into a bear trend now. So if we just go to our monthly time frame, we can see that we have the 200 exponential and simple down here with a pretty solid support line across here as well. And that would basically give us a price of about 118. Now, typically, we don't have a ton of, historical data on the 200 monthly moving averages just because it takes so long for them to actually populate. But we can sort of imagine, they would kind of just go out towards the level right here, something like that, just kind of curving out slowly. So we see that we don't often make it down to the 200 exponential and simple. So is it possible that we actually are already bottoming right here and that's it? It is. It's definitely a possibility. Do I think it's likely? I don't think it's necessarily likely right now because we have lost the slope on the monthly TJD, TDMACD. We're in a very strong monthly red downtrend on the histograms, well below zero line. We've just now flipped this over red. So that's all pretty bearish until we get some kind of signal that it's not on a monthly. We also had a cross up on the blue stochastic right here and then immediately started getting rejected and trending back down. So is it possible again that we bounce this and then continue to the upside? It is. It's also very possible we get a move like this where it trends up over it and then goes lower. And then what we're looking for is monthly divergence. Okay. So when we zoom out here, we see basically this was our low around this area right here. And then this was our second low that was a higher low. And then this was our actual price action difference. So here we have a low, then we have a much lower low here. And then if we look at the indicator oscillator, here we have a low and we have a much higher low here. So that's basically our monthly bullish divergence telling us this is when we want to be entering. So I would rather enter off of a strong divergence signal after a strong move like this than just enter because I just have a feeling or it just might be a good time or bonds are just on some kind of sale. Because if they're on a 7% sale, there's no reason they can't be on a 25% sale. And there's no reason they can't be on a, 10%, whatever. I mean, so we don't know when it's going to end. Now is not the time, in my opinion, to invest for anything short of just a quick little scalp back to the upside. I think that there's a likely, couple dollars in this trade right here on the actual price of the TLT. But I'm just not convinced that, it's worth necessarily getting in the way of this moving freight train. But as long as we're concerned, as far as we're concerned for right now, we have these key levels that we're paying attention to. We obviously know how far some of these macro trends go back. We know the bottom blue support lines up with the 200 exponential and simple on the monthly. We know our green ascending kind of parabola line here. It has some legitimate touch points. It has all these touch points almost perfectly lined up back here. And then it only has one right here, which doesn't make it super reliable, but we did see a reaction off of it here. So I don't want to just completely discount that, but at the same time, I don't think there's as many people looking at that as there are some of the other factors that we're paying attention to. So I think it's important that, we keep focused on this, keep our eye on this, and then look for a potential couple month reversal in the bond market here and the yields to kind of cool off. Now, the other situation, and I don't want to downplay this like I'm all of a sudden bullish on bonds right now, because I'm not any more bullish on bonds. I just think there's a possibility that we get a dead cat bounce. There's a good possibility, a strong possibility that bonds actually have broken down from a key level, closed the lower low, and we actually see this trend accelerate to the downside. We could easily see this 1 month candle end up all the way down here, hitting our target at 116 in a single month, because we have closed a lower low on the monthly, and there's no clear support that a lot of people are going to be respecting, obviously other than our perfect green parabola, which just so happened we got lucky on. We have to call it that there was somebody out there who matters that was looking at the same thing as us, because most people are not looking at that. So in my opinion, what do we have upside? Well, potentially top of the, channel, top of the little triangle based on the descending channel. What do we have downside? Well, 200 exponential moving average downside of the channel. So where does that put us right now? It puts us in a confirmed technical downtrend with a bunch of bearish signals on our indicator oscillators breaking down below support with a coin toss trade. So if I was going to take a trade in the bond market, I would take a bearish trade because it's coin toss and everything is favoring the downside. Now, my personal opinion, my inclination, is that we've actually just been melting down for so long since this top right here in December. So a whole quarter of melting down, I think we probably get a relief rally. So technically, compared to what my opinion is, technicals are always right. More often, opinion, sometimes you just get an idea and you're right. Other times you're wrong and you're like, I'm glad I trusted the technicals. So when they don't line up to me, I'm not interested in the trade. So for me, it's coin toss trade in a bearish trend, with a likely dead cat bounce. So maybe if I was in an upside down position right now, I would look for an exiting opportunity, but I'm not looking to enter. So U.S. oil next. So we see we saw, obviously, we were talking about last week and the month and everything like that. The key we were paying attention to was, are we closing below 100? So this is U.S. oil, WTI crude. I'm not sure if I actually said that. So the key was, is this monthly candle going to close below 100? Let me make this chart a little more legible. I wish I could just do it and leave it alone, but the time frame matters. So here we have this pretty heavy rejection last month. And we were talking about this candle right here, this shooting star, where we have a massive wick that's over 50% of the candle. It's predominantly in one direction, telling us that we tried to move to higher prices and the market rejected those higher prices. More people wanted to sell at those prices than were able to buy at those prices or interested in buying at those prices. We also now have confirmed a hard sell signal and we have left the bullish control zone. So we had our cross and we left the bull control zone. So typically what happens is we see a pretty heavy sell-off after that. So this is a pretty big rejection. We broke down from the, key level, obviously. We did close at 100. It was $100.98. So technically we closed above 100, still have green momentum, still above the zero line, still have blue slope. So we don't want to give up on this yet. And it's still the beginning of the month. But the key things we're paying attention to is, does this candle close green? That's big. If it does, that's a good sign. Does this candle close red and engulf the previous candle? In which case, that is a very bad sign, and I would expect a full-on reversal. And then where do we go if we break down? Where do we go if we break up? If we break up, we retest the highs. If we break down, we retest support at 83.48, potentially down into the 60s or 70s. So what happens in the world that leads to that? What's the big event going to be? Is there going to be this, that, and the other? I mean, we don't know. And it doesn't matter because the technicals tell us way before any of the news hits. So somewhere around some of these key levels we're paying attention to. Again, we have 200 exponential and simple moving averages lining up. This is the weekly now. But again, we're looking at a pretty hard rejection on the weekly. We're looking at a hard sell, leaving the bullish control zone, and a bunch of red histograms. So when we actually look at all these different time frames and what's going on, we're actually seeing, more likely than not, that we are expecting further downside. So that's what I'm looking at now. That's what I'm seeing. And, we have some key targets in mind. So that's going to alleviate some of the stress that's on the economy, some of the inflation. But again, all this stuff takes time. But we know that high energy prices are really bad for the economy. Everything goes up in price. It sucks money out of the consumer's ability to spend, or business's ability to spend on things, because they have to spend more money, on transportation or production or whatever. So they have less money to spend on things that they want or don't need. And the same thing with food prices, commodity prices, energy prices, all the different portions of the commodity market are typically used for either manufacturing, production, or consumption directly. So if it's food, if it's energy, if it's steel. So if all those things are getting more expensive, and then we have to use necessity consumption on the things we need rather than the things we want, well, that would, tell us that typically what happens is the consumer or business spending power is depleted because they can buy less things because they're paying more for the things that they need. So unless we have some super ripping, roaring economy that's breaking records and just crushing everything, and consumers just super strong and businesses are just going nuts, unless we have that, we don't tend to see strong numbers coming out of that. So the market, the Fed, the mainstream is trying to convince us that's what we have. They're like, look at the job numbers. There's tons of jobs available. Well, what jobs are they? Are they some crap job working at a supermarket? No offense if anybody's kids work at a supermarket or something, but you know, like, or you do, but you know, are they some entry level position for somebody to like, you know, work a register or restock a shelf or something like that for a minimum wage? Probably. These are probably not, you know, high paying, great jobs for people. And the reason that we have these vacancies in these high numbers are, one, people have either moved on to better jobs. Two, people have left the market and then moved up into a job, so it leaves those jobs and there's not enough people coming into the market, you know, the job market, to take those bad jobs because they're the worst jobs, so they're the least likely to get filled. Or three, people are just making money other ways and don't want to work in those type of jobs anymore, or they had two jobs before and now they're making enough money or getting enough hours at their one job, they don't have to work their second job. So how many people do you know, or how many people out there used to work 2, 3, 4 jobs that are now only working, you know, 2, 1, no jobs? Probably a lot. There's probably a lot of people that were working 2 or 3 jobs before that are maybe working one, maybe not working any. So, I mean, I like, over my years, friends, family, you know, coworkers at different places, I've encountered all different kinds of people. And typically, when you're on the bottom end of the spectrum, if you're working in like service industry or you're young or something like that, typically you're going to be working a couple worse jobs. And then as you tend to advance along the spectrum and mature in the job market, you know, you move into more of like a career where you basically are going either salaried or working enough hours that you're not working these little odds and ends type jobs anymore. You're not working 8 hours here, 16 hours there, etc. Because none of that is accounted for in the job numbers. So they give us these numbers, but they don't tell us enough detail about them that we don't know that they're not using these statistics to kind of like fib. So it looks like we have this super strong job market, but really, do we? Or do we just have a bunch of crappy jobs that no one wants? Because the truth is, how do you fill a job opening? Well, you pay people enough to get them to take that job. So is the real problem, and the reason we have the job openings that we have now, and there's like this huge demand and this super tight labor market, is the problem that we don't have people that are willing to work that job or available to work that job? Or do we have a problem where people are not willing to or available to work that job for what you're paying for it? Because if all of a sudden now most jobs are paying $10, $12, $15, $20 an hour, and you're still trying to pay $7 an hour, of course you have job openings. And nothing's going to change. You're not going to not have those job openings. So it's very important to pay attention to like the dynamics that could affect these numbers and watch. Is the economy really strong? Is the market really strong? Are outlooks really strong? Because I trust business people. I trust owners of companies and publicly traded companies when they come out and say, you know, we're downgrading our forecast or lowering our expectations for the next 2 quarters or for this year or whatever. I trust those people. I don't trust the people that are always wrong and lie, or are lying and wrong, or wrong and lying, or whether it's intentional or not. The same people are wrong all the time, and most of the time they're lying. So I definitely don't trust those people. I trust business executives that are going to come out and be honest, because regardless of if they're right or wrong, or regardless of if they give a good or bad outlook, they have to like perform in accordance to that outlook. So it's, I mean, you could say that some business, you know, owner or whatever, executive CEO is going to come out and forecast that sales are going to be terrible, and he's just downplaying it so that he can overperform. That's possible, but it has repercussions. The same way that somebody could come out and be like overly ambitious and say, we're crushing it, we're going to keep crushing it, 20% growth through the end of the year. And then if they underperform, it's going to really hurt their bottom line, their stock, whatever, and then their credibility as well. So you could say that they're trying to fudge the numbers one way or the other, but the truth is the best thing for a publicly traded company and for an executive is to just be right on all the time, you know, and just maybe like a slight beat. So that's what I expect. I expect these guys to give, you know, or girls to give legitimate numbers. And going forth, I trust their opinions and what we're seeing from these companies over the influencers and the talking heads, and all that stuff, Federal Reserve, etc. So that's what I'm paying attention to. So that being said, let's look over at the Dow Jones next and see what's going on. So obviously we had a pretty aggressive sell-off, and then we got bought sort of back up and closed right at that key resistance. But the most important thing is we're just right back inside of the 200 exponential and simple. And, we said the same thing on, I think it was Wednesday or whatever, when we're up here. If we close enough candles up above here and we start to consolidate, we can get bullish on this again. But more likely than not, this is an aggressive push back up, and it's just to a lower high. So right now we see clear divergence. We have a very high peak right here with 2 red histograms. So we can call that a swing. We have an internal peak right here on the histogram. So the way the TJD TDMACD works, it helps us to identify trends, but what we sacrifice in order to gain the ability to identify these trends is the oscillation. So we don't have as strong of an oscillation between these. Instead, we basically have more times when we stay below the zero line, or more times when we stay above the zero line for longer, because we're trying to pick up more on like a macro trend. So even though this is technically an internal, it doesn't actually poke above and then give us like a spike like this, we still can use that peak, which is like a, a negative peak, and then this peak, which is like a positive peak on the histogram, for divergence. So that's what we're looking at. A super high peak right here and a super low peak right here. And then here, when we look at that on price action, we see this is a pretty high peak right here, and this one is less high. So we see some clear bearish divergence taking place on this indicator oscillators. We're at basically the decision point, and we have technically flipped into a bear market, and then this was our reversion to the mean, bear market rally or dead cat bounce to try to save the trend. Or arguably, if you were smart money and you've been in this trade for the whole trend up, and now we have broken down from the 200 exponential and simple. You bought the dip once, and then we put in a lower high and started to sell off. Well, one of two things happens. You either exit your position on the way down, or you wait for the retest and rejection, and then you sell into that. And that's the typical behavior we'll see of the market. Now, is it possible we consolidate here, break above this level, and go to new all-time highs? It is definitely possible. It is definitely possible. But let's look at our indicator oscillator and see what looks likely on the daily. So here we see this was a peak, a hard sell, and then we broke down from that peak. Okay, so here we went into the bullish control zone, peaked out, came to a higher high. Okay, but we never actually made it up to where we got a hard sell coming out of that. So here we see the hard sell again on the Jewel Thief coming out of the bullish control zone, and then that started this horrendous dump. So we see realistically, this peak was pretty aggressive, this hard sell peak was pretty aggressive, and now here we're about to get potentially another hard sell peak that could be pretty aggressive. So we want to be careful with this one. We do have some blue momentum here. We do have multiple green histograms, but we are starting to flip red. So could we go back to the upside and continue on? We could, but I have to give this a bearish bias. But it's basically neutral at this point in time. So we'll see what happens over the next couple weeks, etc. But right now, doesn't look particularly great to me. Now let's look at the monthly here, because we did just get that monthly close. Obviously a hard sell signal, left the bullish control zone, and then we had a little bounce, but we bounced off of the 21, which is where we'd expect to bounce, and then we closed right at the 8. So it's like, oh, well, we closed back above support. I mean, we closed at support. So this could easily just sell off a little bit, and then it's just a wick and a red candle back to the bottom of the range, which is 32,900. So I fully expect us to bounce around here for a little bit, but if we do, this kind of looks like distribution to me at the top of a range after a pretty aggressive move. So with the hard sell signal leaving the bullish control zone, a bunch of red histograms on the monthly, and now we're losing the slope too. The slope has actually flipped over red. Doesn't look good to me on the monthly. Doesn't look good. I mean, it looks okay. It could have looked worse, but... And then finally on the weekly, so we got our weekly close, and it was basically an indecision or rejection candle. So we have a longer wick on top. We basically have a neutral close from where we opened at. It's slightly red, but we see there's a much bigger wick on the top than there is on the bottom. Now, we did reclaim the 8 and 21. It's potential that we hold here, and they cross back to the upside. We got a couple green histograms. We're back down at the neutral area. Still trending down, but kind of losing the slope on the stochastics. So, could go either way right now. It's good that we're back on top of that level. We don't want to see something like this, a super aggressive sell-off. But at the same time, we did just recently close a new low, and now we're basically just putting in, a lower high for now. So a close on the weekly above 35,121, and I'll actually be bullish on the Dow Jones again. And that will probably correspond with the 200s crossing back up, reclaiming support, and then, rallying. But I don't see any reason that the Dow Jones should be particularly bullish fundamentally or technically right now. It actually looks like we're getting ready to go really bearish. But there's still hope. The S&P is slightly more bullish. We reclaimed the 200 exponential and simple. We took out this high right here, which is good, a good sign. We're up near the top of the range where we would expect this to sell off. We're not putting in that same divergence because we took out the peak of that high. But if we look back to the peak, like the all-time high, we are actually putting in divergence between those 2 points. So here we have like an internal, move down, and then from that peak internal to the newest one, we don't have divergence, but to the macro peak we do. So again, slightly bearish, but starting to look much better than it did when it was down under here. So it's okay for now, but not particularly great in my opinion on the SPY either. And then if we just flip over to our monthly, we reclaimed the 8 and 21. We're holding above it for now. We haven't quite left the bullish control zone, so still looking okay for now, but we know that the previous times when we got that hard sell and left the bullish control zone, they were pretty aggressive moves. Now, arguably, could this be the bottom and we just keep going? Sure, it's definitely possible. But, this isn't typically what you see on a monthly chart when things are going good. You don't want to see 4 red histograms in a row, and right before that was 3 green histograms and then a red in a row. So now we're actually outnumbering green histograms compared to red. So that is definitely not a bull trend. It's definitely not an uptrend. It's definitely not something to get excited about where it's like we're getting ready to put in new all-time highs. I don't see it. I do not see it. I think we're getting ready to, we had rebalancing moves. We have, some potential bullish catalysts. Maybe the war ends. There's definitely some things out there. But overall, how did things look before the war? Well, not great. How do they look now after the war? Assuming it just ended tomorrow. Well, about the same. Probably worse now because of all the issues that have happened because of that. Things don't just go back to normal all of a sudden. So if it was bad before and then now it's less bad, but still bad, where should the prices be? Where should earnings be? Where should, our outlook for the future be? Not better than it was before the war if we're not better than we were, which we're definitely not. We're definitely not. There's been irreparable damage done one way or the other. So IXIC, NASDAQ, so we basically hit that heart line, started coming back down. Held support for now, which is good. We have potential for a right shoulder down here and a potential reversal pattern. We did take this out right here, so invalidating bearish divergence. Unfortunately, we did close back below the 200 exponential. So we basically got rejected before we even touched the 200 simple. So that's a pretty weak, reversion to the mean play. We don't want to not even touch the 200 simple moving average. So we didn't even get there. And then on top of that, we lost the 200 exponential again. So this is very close to just flipping back over bearish again. We've been in a bear market. We're likely to reconfirm back into a bear market, and we're likely to do it from elevated levels. So this is going to start looking like a bearish reset, but we'll have to wait and see. Obviously, if we start comparing peaks again, we have, low peak back here compared to this peak. If we go to the macro peak right here, we don't see any divergence on the NASDAQ. So doesn't look particularly great to me though. And then if we just switch over to the monthly real quick, and I'm only doing the monthly just because we had a big month close, quarterly, etc. Basically got rejected at the 8. Hard sell signal, left the bullish control zone, all red histograms. Blue slope still, we're basically at it. So maybe that was our little bounce. Maybe we get a little bit more of a bounce. But overall does not look particularly strong. Not what we want to see in a strong trending market. Next we have the Russell. So Russell got rejected right at our key level at the 200 exponential. Again, very, very weak. Didn't even get close to the 200 simple. Basically looks about the same. Looks like it's ready to, it's just going to follow the market, but do a worse job of it. Let's be real here. So between the 200 exponential, the 8 and 21 on the monthly, just kind of chopping around here. Hasn't lost it yet. Almost did 3 weeks in a row, or 3 months in a row. Almost lost it, but found support. You could argue that's bullish, that every time it sells off, it got bought up. So that's actually decent. Unfortunately, hard sell signal, a bunch of red histograms, and the Russell is just straight up garbage. Not looking good. But there's an argument to be made for some bullishness. All right, XLE energy still very strong for now, but we have to be very careful of the bearish divergence that printed right here. Here's a high, here's a lower high, here's a high, here is a slightly higher high. Very clear bearish divergence, and then we see the same thing taking place right here, a high. This hasn't quite rolled over yet, but you know, if it does, if it starts to peak, if it starts to roll over, we'll have again clear bearish divergence taking place. So we're already seeing signs of it and some confirmations on the TJD, TDMACD, and this is on one of our most bullish sectors. So this has been bullish for a while. We've been bullish on this for a while, but now we're at those levels where it's like, okay, is this bullishness about to run out? Are we about to, you know, we don't want to overstay our welcome. So you guys know I've been rebalancing, taking profits on some of these things that have ran, and obviously that includes energy. XTN, transportation. So obviously we had a nice little breakout. We underperformed our breakout measure move. We did take out the high right before it, but we're unable to take out that high, unfortunately. It looks like this is rolling over heavy. This is a very, very bearish candle. Obviously, we don't want to see this on a daily. Closing back below the 200 exponential and simple. Not good. And then if we just look at our monthly, take off the cycles, we basically closed back up here. Now, again, we got bought up 3 times pretty aggressively. So that is a rejection of lower prices, which is good. But we know the momentum is still down here. So even though the price got bought up and we rejected lower prices, we're just going back down, it looks like, to revisit those prices once again. So we don't want to see obviously we have plenty of time, but a monthly close below 85 is going to look bad. But again, this looks pretty toppy to me. XLF basically hit our target perfectly, got rejected, came back down. Now we're back in between the 200 exponential and simple, and we're at the heart line. So we're basically at the neutral area. We're smack dab in the middle of the 2 moving averages. We're right at the heart line of the descending channel, and it looks like, you know, we basically have a bullish cross right here or a slope line here, and then we're getting ready for a bearish cross right here. So in my opinion, this is like neutral for sure, pointing in all different directions. And then again, if we look at the monthly, you know, every time we see these hard sell signals led to a pretty, let's be real here, okay? This was our hard sell signal. This was when we left the bullish control zone. So depending where you want to measure from, we'll go from, you know, when we left the bullish control zone. We're not going to like, you know, pick and choose here. So it went up from there another 3%, and then including the wicks, it went down 25%. And then the next time after that, when we left the bullish control zone and got the hard sell signal, we actually went down a little, then we went back up about 6%, and then we went down 18, 19%. And then we saw some clear bearish divergence take place right here, right before the Rona dump. And then from our left the bullish control zone, we obviously got the hard sell. It happened so fast on the monthly, you didn't even get the hard sell signal till we were basically, you know, at the bottom, bouncing back up. So, but wick down was 42.9% on bank stocks right there. So we're getting that same signal again. So do I care if it's going to be 12%, 18%, 40%? Not really. Does it seem likely? Did we get a super aggressive sell-off right away? And that's why the lag on the hard sell signal, and that was the bottom? We didn't get that this time. We haven't even technically left the bullish control zone, and we're seeing bearishness. So in my opinion, we're headed down here to 31. That seems the most likely target to me. And then again, if we go from just the top wick versus where we're at right now, just about 25%. If we go from where we're at right now, and you just said it's definitely going there, that's 19%. So that seems pretty realistic for a target, would be the top from the Rona dump. Communications still looks terrible. Very strong downtrend, probably the worst sector. Mixed signals, we're building momentum, but we're also getting ready to dump, it looks like. Pretty heavy reversal candle. We did fill the gap, so maybe it could go higher from here. It doesn't look good, though. If the rest of the market doesn't look strong, I think the worst sector is probably going to look even worse. So consumer staples, pretty strong. You know, we obviously had a pretty decent little sell-off, a retest of some key levels, and now we're building momentum, all green histograms. We're in the bullish control zone, still trending up powerfully, but we are nearing like resistance here. So realistically, we're so close to the previous all-time highs. We're in the bullish control zone. There's a little room to run, and we have built up a decent amount of momentum right here. So to tell you the truth, I think this probably is that new all-time highs very soon. I mean, the weekly looks super strong. could get rejected here and put in a lower high though. The monthly still looks pretty darn strong. Now the only thing here is the blue stochastic crossed under and then comes back up. A lot of times this gets rejected and then we print bearish divergence. And if we look at this, we have one drive of divergence here on the stochastics. We have a drive here, and then we have the next one right here, and then this would potentially be a third drive, each one higher than the last, and that would give us 1, 2, 3 drives of bearish monthly divergence. So XLP, consumer staples, could be getting ready to have a serious dump. Because if we look right here, this right here was one drive right here, 2 drives higher right here, 3 drives higher right here. And then this was January of 2018. And then here we see one drive high here, one lower drive here, and then a third lower drive here. And then immediately afterwards, we saw a pretty decent dump, but we also just like kind of went sideways for a while. So, you know, basically a 17% jump off the triple monthly divergence. We actually went a little lower right here, and then we retested that on the Rona dump. So what would a 17%, dump look like from the top? I mean, probably that would be losing support. Would that be a retest of the COVID high? I mean, that's 18.77, the pre-Rona dump. So, I mean, maybe the consumers already got a bunch of supplies. Maybe they're going to kind of cut back temporarily if things get bad. Cut back on spending. No, this is the staples, so this will do better in the long term if we go into a long recession or depression or anything like that. Doesn't mean short term it can't have a heavy move. So I'd be real careful with this one now. It looks strong, but definitely do not like seeing. We were on the monthly, weren't we? Yeah, okay. Got my own head there. So yeah, I mean, on the monthly, I don't like seeing triple bearish divergence. I'll tell you that much. XLU, again, one of our safety trades, looks strong. Looks very, very strong. Broke above the heart line. Looked like it was going to get rejected right here and didn't. Momentum. Everything is just very strong on XLU. I mean, we look like we have basically closed back inside or at the heart line of this long-term channel. And if that is the case, and we get our move to the top of the channel again, we're talking about like an $85 target. And you're like, yeah, but we're already at 75. That's only $10. Well, yeah, but I mean, this isn't exactly like, a mover and a shaker. Let's be real here. But if everything else is going down and this is going up by, 5, 6, 7%, while everything else goes down 20%, I'd say it's a pretty good place to be. Looks pretty strong. Definitely looks strong. I mean, but it's already had a pretty strong move also, so. But it does look good. Probably the best chart we looked at today. XLRE, real estate. But we do have to keep in mind, just because it's been strong doesn't mean this can't be the beginning of like that quarterly reversal we were talking about either. So we don't want to get greedy here. We want to make sure that we are diversifying, and using correct position sizes. Not to go super overweight on something because it's been in a strong trend, because that trend may not continue, at least not in the short term. XLRE, real estate. So we'll have to see what's going on here. Definitely looks like it could potentially be building a, head and shoulders pattern. Still has strong momentum in its favor. Holding key levels, breaking above key levels. I mean, it looks pretty strong right here. Now, if it gets much more of a move up here without taking out the high, we're going to start looking at some bearish divergence. But overall, it looks pretty good right now. It really does. Looks okay on the monthly. Looks okay on the weekly. Nice close on the weekly. But I mean, we did see something like that last time, and then it just dumped. So, I mean, if we're right about bonds and interest rates, and rates start to come down, that could be definitely perceived as bullish for the housing market, real estate, etc. So I wouldn't count new highs for this out just yet, to tell you the truth. But we'll see how that narrative develops through. So VWO, emerging markets, again, just consolidating in that range. Nothing to see here. I expect it to continue consolidating. Till it breaks, there's nothing to see, in my opinion. DAX, Germany, reclaimed some key levels, but hard sell signal. Little momentum in its favor, but clearly in a bear market, getting rejected, it looks like. China, CN50, still looks just absolutely terrible. Had a decent close into the end of the day there, and it's trying to do something, but, you know, does it get its push back up here to retest the 200 exponential and simple? Maybe. I mean, look at this monthly close. It's good that it got a big wick on the bottom. I do like to see that. The wick is over 50%, but that's also a big, juicy red candle and a new low. So I don't love that. Is this going to be, you know, this was our big swing, shooting star rejection. This isn't quite a hammer, but it is a pretty decent rejection of lower prices. So on the monthly, is China bottoming? I mean, it's possible. We're at key support levels. I think more likely than not, this thing bounces from here back to like that 14,760 level. But there's also a lot of geopolitical risk right now. UK 100, still pretty strong. Got to be careful here if this starts rolling over. Really do not want to see this roll over from this level. Want to see this thing have some more strength and revisit those highs. Potentially take them out. It looks like it's ready to roll over. Seeing some potential bearish divergence on the stochastics right here. Not on the TJD, TDMACD. Looks okay for now, though. Stronger than most of the other markets we've looked at. EWZ, Brazil. Still pushing up here. Still looks like it's headed up to our target, 41.80. And then after that, we want to see some consolidation, a retest down here. The 200 simple flip bluish. Bluish. How about bullish or blue? Either way. And then the 200 exponential crossover. And then at that point in time, I think we consolidate. And then this thing breaks out. Not to new all-time highs, but new cycle highs. Another retest up here and then a consolidation. And this thing probably goes haywire. This is our retest of the 200 exponential. Looks okay. A retest of the 200 simple would be that trade setup playing out. Looking pretty good. Looking pretty good. Still technically longer time frames though. Consolidation or technically bear trend. All right. Let's just do our DXY. Still very strong. Does not want to just roll over here. It's looking more and more like just a bullish consolidation. I really want to see this come back down and give some relief, but the dollar is just real strong. Tesla, got to be careful this isn't an island top. I don't like this gap up right here. If we come down and fill it and then move back up, it'll look better, but not good. Let's see how it looks on the monthly. Pretty strong monthly. Bunch of green histograms. The stochastic is still below. The blue is still below the pink. Looks okay. This thing really needs to pick back up some steam. If it starts to roll over here, it's going to look really bad. It's just going to look like a series of lower highs and lower lows. And like just a descending, like broadening wedge. Not good. Because the drop to the downside could be pretty violent. If it's at the top of the pattern now. It's basically a lot of downside potential. Now the breakout takes us to new all-time highs and much higher. But I wouldn't want to buy at resistance right now, hoping for a breakout when there's so much downside potential. ARKK. So we saw Kathy come out and do her most recent ARK update. She's contradicting herself pretty bad. We know pretty much that if we go into a recession, probably if your company doesn't make money or your stock is non-profitable and, you know, like highly speculative, it's probably not going to do well. So she's basically calling for recession and less growth and a weak economy. But then at the same time trying to call for like all of her trash stocks to do well, most of which don't make money. So very strange dynamic, contradicting herself once again. Had a nice little rise up from the bottom, but still down like 50% from the highs. So very, very weak. You could argue that there's so much damage already done to this that it can't go lower, bro. I would argue against that. I would say that they're still, the problem with this arc is not their research necessarily, although I don't think it's the best. They claim it's the best. I don't think it's the best. It's not their, okay, let's say it's not their research. The only things left are their macro strategy and their execution. And we know their macro strategy is garbage, at least over the last couple of years. It's trash. All it's done is just melt down. So that's not good, and they're not changing that. They're just sticking to the hodl mentality. So if their strategy is not working, and then let's look at their execution, Kathy consistently sells things at the bottom and buys them at the top. So we know the execution's not good. She's trading what would be, if someone told me they had a 5-year time horizon, and then I said, that's awesome, and then they showed me their trades, and they were trading in and out of stocks on daily time frames, weekly time frames, monthly time frames, I would say, well, you obviously don't have a 5-year time horizon. It would be one thing if you're trimming positions because you have outflows, or adding to positions because you have inflows, or balancing because you have maximum allocation of like 10% to a single stock or to a different sector or whatever. That's all fine. And I would totally agree with that. But that's not what she's doing. That's not what she's doing. She's literally trying to like scalp the market with other people's money in an ETF with a 5-year time horizon. On a daily, she's scalping. That is not how you trade. If you have a 5-year time horizon and some narrative about disruptive innovation, you should never be day trading. That literally doesn't even make sense. The only thing you should be day trading is adding small positions, rebalancing by selling small positions, or making like just tune-up trades in your portfolio. You should not be completely dumping out of stocks that a month ago you had massive conviction for. You should not be loading up on other things, trying to pick bottoms on them. That is not what you do with a 5-year time horizon. That's irresponsible. So even if you say they have good research, which they don't, she even says most of our research is done by college students who have their hands in the right in the thick of things. I mean, have you ever met a college student before? Like, some of them are super smart. I give you that. But they have no real life experience. Most of them, especially ones she's probably dealing with, are like elite, higher education, kids that have probably had everything handed to them for their life. So do they have much real life experience? Do they know anything other than what they learned from some woke professor in college, or how to stick fingers in each other? Probably not. They probably don't know shit. So that's where your research is coming from, and then you're making it public, and then it's obviously not working, and then your strategy's not working, and your execution's not working. So you have bad research, you have bad strategy, and you have bad execution. So am I a buyer? No, thank you. Will there be a time when, the ARC presents some possibilities? Yes, but I just do not think it's now. I mean, this is one of the worst charts, and definitely the worst ETF chart I've ever seen. Absolutely horrendous. I can't believe that woman. She needs to hire a consultant to help her fix. I mean, I don't even know if you can fix what you've done. You now have to go up over 100% just to get back to break even from 2 years ago. So if you're predicting 20% per year over the next 5 years, well, you're already down 40% from your prediction, and then you're down another 50% from the drop. So in order to get where you needed to be, you need to go up 100% to get to even, and then you need to go up another 20% from there, which is basically the equivalent of going from 50% to 120%, and then you have to go up another 20% from there, and that's not even taking into account like compounding. So now you need to go up 100% plus 20% plus 20%, but in all reality, if we look at it the way it actually needs to go up to recoup those levels from where we're at now, she basically has to 200% the entire portfolio. So if she's picking disruptive innovation stocks, every stock she's picked is going to go up 200% and average out to just be where she was supposed to be if she didn't take a 50% drawdown. And that's just to get even. And then if that takes a whole year, that's another 20% she's down from where her targets are at. I mean, that doesn't even make sense. It literally doesn't even make sense. It's supposed to be up like 170, 100% of where it was at the top, plus another like roughly 70% on top of that. And instead we're down 50. So now we need like a 225, 230% move just to get to where you're supposed to be. I mean, if anyone has ever underperformed anything, ever, it's Cathie Wood. I mean, she picked Tesla, she picked Bitcoin, she went all in on a couple things and she was right. But that does not give her any long-term credibility. And in my opinion, this is an old metaphor that you hear all the time is you hear about people when they hit a home run. You don't hear about when they strike out 100 times. And in my opinion, that's all Cathie Wood's trying to do. She's striking out 100 times, just praying to God that eventually she swings and hits another home run. And that is the worst way to make and manage money. Because you're only going to have a couple home runs. You're going to have plenty of strikeouts. So NVIDIA, did I talk about SMH? So the semiconductor ETF looks pretty freaking toppy right here. Definitely do not like this. Don't want to see this lower high right here. Don't want to see bearish divergence printing. Everything about this looks gross. It has bearish divergence between the peak down here. It has bearish divergence between the peak right here. That was the all-time high on this. This was the peak down here. So we have bearish divergence here. And then if you just consider this part of this move, so you don't want to count that, that's fine. You can do that. We have bearish divergence here. We're below the 200 exponential and simple, and they're basically flat. So does this look like semiconductor ETF has topped out? It really does to me. And the last time we saw this type of move, now granted, we sold off and got pretty aggressively bought back up. So maybe that happens again. Maybe it's already happening. But this was the Rona dump. So is everything already priced in for semiconductors and they can only make so many? There's probably, a year full of orders already placed and paid for. So are people just going to keep placing orders a year out? Is demand going to start coming down? Are they eventually going to meet these orders and be able to sell actual product? If I have 100 shirts that I can make and there's no way for me to make more shirts, and it's January, February, March, and all my shirts are already sold for the year. So if you order a shirt now, I tell you, hey, I know you want a shirt, but it's going to be at least 9 months because all the shirts we're going to make this year are accounted for, and we don't have a foundry to make more shirts. We don't have the materials, we don't have the labor, we don't have the ability. So all our shirts are accounted for. Do you want to go ahead and still place your order and get in the queue, get in line for 9 months from now to potentially get one of our shirts? Maybe. I mean, possibly. But if all your demand, all your sales, all your prices already priced into, how far out does it go? And we don't even know. It might not be a year. It might be everything sold for the next 2 years. And then we'll have production coming on in 2024. So it's like, hey, don't worry, because even if you have to wait 2 years and you're paying for your goods right now, or you're ordering now and you got to wait 2 years to get it, don't you worry, because by then it's going to be so far out into the future, we'll be able to do more production. I mean, that's not a bullish case to me. That's not bullish to me at all. So NVIDIA looks like basically hit resistance right here. Didn't quite play out the target, and then it's back down at support. We don't want to see it take out this low right here at 256. It looks like it's rolling over. This was a super bullish move right here. Nice breakout. This is definitely a options driven, I don't want to say dumb money, but retail, move right here. So we'll see what happens. We saw a lot of the retail stuff, a lot of the meme stocks pop off. We saw a lot of options. We see bullish Tesla, bullish AMC, bullish GameStop, bullish anything with a meme in front of it, except for a crypto meme. Netflix just going sideways. This thing is just dead. I mean, the indicator oscillators are just slowly going up while this goes sideways. This is the definition of a bearish reset. I mean, Netflix looks like it's probably going to 260 after this. This is absolutely horrendous. This is terrible. Under no circumstance whatsoever would I be in a trade on Netflix. Could it go back up here and close this gap and it was 35%? It's possible, but this is just so terrible. There's nothing going for Netflix. It's like absolute trash. Unless like Squid Games 2 is announced or something and people are excited for it. I mean, they might even already have that. I don't know. This looks like this right here. Looks like the beginning of a pretty aggressive, disgusting move to the downside. Does it have to happen? No. But, I mean, we've seen it before. You know, it had a 80% drawdown and then bounced back up to the 200 or the 821. And then after that, it had an 82% total drawdown. So, I mean, I just don't want to be participating in Netflix and one of these shows up, okay? Because I don't think this could show up, but I think there's a higher likelihood that this shows up. So, you know, at this point in time, I would say upside potential is a retest up here, 30%. Yeah, that's good and everything. But, I mean, let's be real. What's the downside potential? 31 at least? Probably 51? This thing could get nasty. It looks absolutely terrible. This is the monthly chart, and it looks so bad. I mean, if I was Netflix, I would just close up shop. Just close it up. Turn on your Netflix later on tonight to watch whatever it is people watch on Netflix. Doesn't even work anymore because they just closed up shop. This is just absolutely terrible. Not literally, but it's pretty bad. Apparently, people are not Netflix and chilling anymore. Apple, very strong. Probably the strongest. Looks very strong. Probably going to roll over here a little bit, come back down. I mean, it's holding strong. Everybody loves Apple. This is like just the biggest, thickest, juiciest trade of the century. Still looks very strong. The monthly's got a couple red histograms. Starting to kind of like blah here at the top. But we saw that a couple other times and it just put in higher highs. So I would not get bearish on Apple anytime soon. If it does have a pullback, there's so much price action in this area. It's just going to kind of chop down. I mean, this is just, this right here. That's not what you typically see. Especially not on a dead cat bounce. Usually you see a few candles, a little indecision. This is just buying, massive amounts of buying in Apple. Facebook or Meta, pretty trashy. We saw some bullish divergence, got a nice little pop to the upside. There's a massive gap back here. You know, it's the same thing though. You want to bet on this thing, fill in the gap. I mean, that's a massive gap. Why is this so bad? Is it just the narrative? I mean, we came down, we tagged our support perfectly. Very aggressive selling. I wouldn't want to try to pick the bottom on this thing. And then here on the weekly, that's basically the retest, the reversion to the mean. Coming out potentially of the bearish control zone, bunch of green histograms. So what is it, 243? But man, that gap is just so bad. I mean, if it got back up to here, it probably just straight up fills the gap. Is it going to leave this open and then come back way later and fill it? That's a tough one. I mean, there's definitely potential for a trade here. But it's already come so far, I wouldn't want to mess with it. If it broke down below 210, I wouldn't want to participate, which is like 5%. But if it breaks above 244, it probably just goes straight back up and closes the gap at 287. So maybe there is actually a trade here. I mean, I would not want to be participating if it broke down below this level on like a daily close. So you're talking about 27% upside, 6% downside for a 4.3 risk-reward ratio. I mean, that's a pretty favorable setup. 4-1. I obviously hate Facebook, Meta, and Zucchini. Not actual zucchini, but the person zucchini. Actual zucchini is good. Google, especially that fried zucchini. Oh, man. Some of that southern food. Google looks decent. Pretty aggressive selling coming in right here, but still above the 200 simple. Now we know the 200 simple has crossed above the 200 exponential. We're starting to lose a little momentum. Man, this one's iffy. if I was going to buy right now, it would be, if I was going to buy anything in tech, it would probably be, you know, Apple, Microsoft, Google. It wouldn't be Facebook probably, wouldn't be Netflix, wouldn't be Amazon. Amazon looks decent, trying to reclaim these key levels, but I just don't see it. Not looking particularly great. All right, let's jump into some cryptos. What's up, James? James Game says US 10-year yield is moving up. Yeah, I mean, it's been moving up for a while. You're talking about right this second? Oh, wait, what time is it? 9:13? Are you saying you think it's going to keep going up? I'm not sure what you're saying. It has been moving up for a while, and we've been, you know, very right on the 10-year yield going up for sure. But it's now at resistance from a 40-year downtrend. So maybe it goes up a little bit more, but it likely gets rejected because we're at resistance. So Bitcoin futures back open, obviously had a nice little move up over the weekend, gapped up, coming back down to fill the gap. On top of the 200 exponential and simple, as long as this area holds 46,000, it looks good on futures. Really want to make sure to hold 44,575. Daily looks like it's ready to roll over. You know, the stochastics are angled back down. We're seeing, you know, 2 out of the 3 last histograms are red. Obviously, this one just opened up. Daily doesn't look bad, but it doesn't look good. We basically gapped up, pushed up, and then spent the whole week filling the gap. And then we basically pushed up here again. If we hold above this level, it's going to look okay. 44,385. If we break down below there, it's going to look bad. But right now, it looks okay. You know, we talked about the monthly, and it's basically just range bound. You know, we're at the top of the range right now. If we break down, we probably go back down to 39,000. We're just oscillating between the 8 and the 21. All red histograms. Stokes angled to the downside and accelerating. Not what I like to see. Macro monthly bearish divergence. Weekly, we have bearish divergence, bullish divergence that's playing out now. We're above the 8 and 21. Looks like we want to come back down and retest them. Like 43,000 really needs to hold. And then we get the 821 cross back to the upside. And then, you know, we really got to be bullish at that point in time. We can consolidate here long enough. Now, do we get some super aggressive candle come in and just start massive selling? I would not be surprised. I would not be surprised. Daily Bitcoin Bitstamp chart, consolidating between the 200 exponential and simple, got rejected off 200 simple. Basically just consolidating. On the daily, it's 48,300 and 44,800. So, I mean, we're talking about like a 7% range from the bottom to the top, and we're right smack in the middle of it. Yeah, I mean, there's nothing to see here. You could arguably sell resistance, buy support, and just anticipate the breakout. You know, you could basically, you could short the resistance and then buy spot at support and then have a stop loss in either direction if it breaks out, you know, a decent amount in one way or the other. And then you're already positioned. And then just be net neutral here, or you know, close some of your trades as we touch resistance, close your longs as we touch support, close your shorts. This is really just a big consolidation kind of going up. Now we know we have that ascending channel. Sorry, this chart's so ugly, guys. But the white resistance and the white support, we hit our target already. We hit our key fib. We consolidate here long enough. I think we move up to the next one at 52,000. If we break down from here, I think we come back down and retest support at like 40,000. But these are just all the same numbers. So there's no surprises here. We see what we're doing. And then if we go the monthly, or weekly rather, looks close to confirming the 821 cross, hard buy, multiple green histograms. Looks good on the weekly. Close to confirming bullish. And then on the monthly, we're just back at the top of the range. And again, it's just 46,000 as the top and 39,000 as the bottom. All bearish and momentum to the downside. You know, basically just consolidation, mixed signals. I mean, we got to pick a direction. Bitcoin's been consolidating. I expect to keep consolidating. So we saw the Ethereum trade play out, closing up here at the 200 simple. 200 exponential is bullish now. You know, that was a nice 20%. Congratulations to anybody who took advantage of Ethereum. Remember, this is not financial advice. I'm not your financial advisors. Markets are extremely volatile. Please do your own research and trade responsibly. Hard sell signal looks ready to leave the bullish control zone. Still pretty bullish on the TDMACD. You know, holding this level is really good. If we just go sideways here, we break out of that descending resistance, and then we likely pop up to like 39.59. So say 40K. If we sell off, we want to at least see 32 hold, 3,200. Total market cap looks just like the Bitcoin chart. Starting to look good. If it holds here long enough, it's going to look much better. Bitcoin dominance chart broke down pretty aggressively from the 8 and 21, and that's why we've been focusing on those altcoin trades lately. It looked like they were ready to pop off. So for now, this is still building bullish momentum, but it has averted the 821 cross. So bullish here. Looks like we're getting rejected at the bullish control zone, rolling over on the weekly. You know, rolling over right here, getting rejected. Potentially about to have the 200 exponential cross under the 200 simple, which is actually building momentum to the downside. Obviously, this is lagging a long time because of the weekly chart. Is it possible we come down here and retest the lows? It is. I don't think it's likely, though. I think most of the shitcoins probably had their little time in the sand. So weekly or daily Matic chart, still at resistance. This thing just needs to consolidate for as long as possible and let the indicator oscillators cool off. Because it doesn't look like there's anywhere to go right now, and there's no momentum, and it's maxed out on indicator oscillators. Avalanche at resistance, maxed out on indicator oscillators. I mean, it's the same thing. This thing needs to just go sideways for a while, and then eventually it can go back up, but it's already used up all the fuel it has. Same thing with BNB. So what was the question on this? Could it be a head and shoulders? I don't know when the last time I even charted this was. Yeah, a long time ago. Or at least on this exchange. So I guess you're talking about, could this be the head and shoulders? Yeah, I don't think that's far-fetched. I mean, easily the touch of the top of the 200 simple could be the right shoulder. It would be a weak right shoulder. It would be fairly symmetrical, not amazingly symmetrical. I mean, it could get the push up here, and I wouldn't be surprised, especially because of BNB's overall use and whatnot. Now, what about Fibonacci-wise? I mean, that's pretty technical. So does it make more sense that we're drawing it like this and then we have the 382 as the neckline? I think it probably does. I think it probably does. So yeah, I mean, I wouldn't put this past BNB, to tell you the truth. And then the truth is, realistically, what would this look like if this played out? If you were right and this turns out to be a massive head and shoulders pattern, well, what are we looking at? We're looking at basically, let me make this white and then I'll make this white. Or no, I think I always make it blue. So I'll just leave, I'm going to leave that one right there. Yeah, that's what I'm going to do. I'm going to leave this one here and turn it blue. I'm going to add this one here and turn this blue. You already know what I'm doing. I know you guys do. And I'm about to do this the wrong way, I'm sure. Oh no, we did it right for the first time ever. After 1,000 times using this tool. After 100,000 times using this tool. Successfully drew it correctly. So, I mean, in all reality, that would basically look like an Adam and Eve top. You know, with a pretty heavy support down here. Now, does this have to play out? Of course not. Of course not. But if we broke down from, if we break down from the head and shoulders back to the neckline, and then this does confirm a head and shoulders, and then we break down from the neckline and get the measure moved down, that's probably going to be, now depending where that head and shoulders breaks from, let's just say conservative. Let's say it tops out at the 200 simple, and then we get a breakdown from there. just more conservative, assuming, you know, it goes up slightly higher, but then it just gets rejected. Nope, that's not the one. There's the one. So that breakdown basically takes us back to the neckline, and then this really starts looking like an inverted Adam and Eve. You know, or like this is sort of like, yeah, I mean, that could be pretty bad. Now, I mean, I don't know. There's not a ton of support built by BNB on the way up here. Is that manipulation? Is it random bullishness? Is there just no volume? If it does break below those levels, whatever you want to call it, you know, from right here was January 21st. And then, you know, it was above that level on February 19th. So there's 1 month of price action. There's a 1 month candle that took the price from $44 up to $211. So if we do revisit those levels, there's nothing saving you. Because if you bought at $44, you're not even thinking about selling at $444. But if you bought anywhere around here and it looks like it's about to break down below 200, you're just getting the hell out, in my opinion. So I could see this developing into a really nasty chart. Right now it looks okay. It doesn't have to. None of this has to play out. It could go to new all-time highs. But it doesn't look good. There's a lot of danger here. I'm glad you bought this up because I don't actually have a Binance account, so I never pay attention to it, and I feel like it's a popular one. So hard buy signal on the weekly, bunch of green histograms crossing back above the 821. Weekly doesn't look bad. Monthly is just bouncing the 21, closing at the 8, bunch of red histograms. This tried to move back up, and it looks like it's rolling back over, so I would be real careful this thing doesn't start building momentum back to the downside, which would line up with what we were looking at. So there's a lot of downside risk on BNB right now. All right, so Cardinal beads, aka ADA. See what Charles has been up to. Oh, Charles. I think this has like longer history on like any chart but this one, but let's look at what's going on here. So let's take from the top right here to the bottom right here. So we confirmed above the 236 already. The 382 is also the 200 exponential. The 0.5 is also the 200 simple. So this could easily still creep up here a little higher. I don't think it has to be topped out right here. Another 7 to 26%. Now, is there a trade? I mean, you're buying into resistance. So not really. I mean, you would have to basically say if we take out this low on the way up here and start breaking down below key levels, or arguably the Fibonacci on a daily, that's 11% stop loss. So if your target is a 0.5, there's 27% upside, 11% downside, 2.5 to 1. That's not bad. But this thing is trash for sure. We know that. That's a fact. So that's a 1-to-1 risk reward ratio if the target's a 382. So in my opinion, if you want to get, if you're in this already, you're right in the middle of the zone. So I wouldn't be like scared, but I'd be ready to lock in profits. Now, what I would look for is, I mean, something like this. I would look for this move. And that's a pretty juicy stop, but I would look for something like this. I know it's not what you want to hear. You could run the stop tighter than that if you wanted to. But that's a, you know, if basically you're waiting for this to come back down. And what you're really looking at is an inverted head and shoulders. And if it does end up being an inverted head and shoulders, you know, it likely goes much higher. Now, does that happen? Probably not, because Charles Hoskinson sucks. Cardano sucks. But it could. I mean, this would basically be what you're looking for. And then you're really looking for like the juicy, you know, hey, that was it. And I just got a huge discount on Cardano. You know, with targets obviously at like the 0.5 for like the head and shoulders. You know, and we still could go much lower after this, but that's 44% move to the upside with a 9% stop loss. 4.87 to 1 risk reward ratio. So for me, I would wait for the pullback. If you don't get it, you don't get it. If you do and it holds, you take the entry, run it up to the 382, take some of your profits, 25%, 50%, whatever, 33%, and then the next level you're looking for is the 0.5, and then each time you hit a target, you move your stop loss back up. So we hit the first target, 22% to the upside, you lock in half the gains, you move your stop loss back to entry, so the other half could sell back off and you break even on that half, or it moves up to the next target, and then when it hits the next target, move your stop loss back up to the first target, and then, you know, so on and so forth as it keeps going up. You know, because you could have a third target up to the 618. It wouldn't be crazy. Now, does it get there? I don't know. But, you know, how often does something break down, go low, and then eventually, you know, come up and put in a 61.8% retracement or go to new all-time highs? Happens all the time. There's only really two directions you can go in. So it either goes back up eventually or it keeps going down. So if you're in the trade and you take off 50% here and then 50% here of the 50%, so, you know, you have 25% of the trade left open for this, that's a 70% move, and your stop loss was only 9% initially. Or you could do 33, 33, 33. You do whatever you want. I typically weight the first trade the heaviest just because I like to lock in those gains. But there's an argument to be made for Cardano. Technically, fundamentally, it's definitely trash. And also, Charles Hoskinson is a liar and a bum. But don't take my word for it. Just look into it. XRP. Oh, man, guys, come on. It still looks terrible. Like, we had that breakdown from the key support. We reclaimed those levels. So that's good. Still below 200 exponential and simple. I mean, still in a bear trend. They're both angled to the downside. Looks pretty tired. I know you've seen this before, but, you know, this was our 2017, 2018 high. And we did not revisit that high. We did not get back up to that high. So this is the worst kind of chart you can have, is a whole cycle plays out and you don't get to a new all-time high. And I know people are like, yeah, but it's because the SEC, they're manipulating it. They're pushing down prices. They're about to win their court case. Let's wait till they win their court case then. Let's wait till the SEC finds them and it's all okay. But right now, I mean, calling for even all-time highs, let alone new highs, is just, I mean, it's crazy. Just don't see it, man. And then macro-wise, if we look at the peak from here and we take it down to the bottom of this cycle, I mean, that was exactly a rejection at the 786. And then we came down to the 0.5, pushing back up. It looks like it wants to go to the 618 on XRP. And then after that, I mean, that's a high. That's a low. That's a lower high. That's a lower low. So we're probably going to put in another lower high. And then we're probably going to put in, you know, another lower low. And this thing's pretty well respecting the fibs. So, I mean, I don't even want to say it out loud. But does XRP go to 41 cents? I got to say yes. So could it get cut in half another 50%? I mean, it really could. And it looks likely, honestly, guys. Looks real likely. Whew, all right, thank God we made it through them without my monitor just spewing on me for looking at the shittiest of the shit coins. XAU, that gold trade. So we did close below the 821. It looks like it's coming down like low here. You know, very clear support line, descending triangle. Looks likely coming down here. Target is still 1851. Gold looks weak. Silver looks worse. It's just putting in lower lows and lower highs. It is above the 200 exponential, which is good, finally. Gold has been above its. 200 simple, still above it, but not quite flipped positive yet. Hard buy signal, red slope signal. Kind of getting mixed signals from silver. Doesn't look particularly great to me. The gold silver ratio. I mean, it saved that 821 cross on the weekly right here, and it looks like it's going to come back up. So we talked about this, how we had a low, a higher low, a higher low, a higher low, a higher low, you know, and consistently higher highs, with the exception, well, that's pretty much same high. So if this pushes back up here, there's a good possibility it comes back up to 82 and then comes back down and finds support here. This looks like it wants to go higher. I really think this is going to end up hitting our target. This looks like basically a bullish reset. I mean, look at what's been going on here on the weekly. You know, the stochastics were all the way up here, and they've been trending down lower. The histogram was all the way up here, and it's been trending down lower. And in the meantime, the prices basically just went sideways to up. So eventually, when these reverse and the price starts going up with the histograms at the same time, it's going to have so much more room to run. It was having difficulty running because it was already inside the bullish control zone at resistance. So now it's just breaking through resistance while the indicator oscillators go down. This is a perfect example of bearish divergence taking place between our targets that is leading to a bullish consolidation before continuation to the upside. So in my opinion, if you have to put your money right now in gold or silver, somebody came up to me and said, put your money in gold or silver. And I was like, oh my God, which one? And they were like, you have to choose. I'd be like, I'll go with gold. Based on technicals. And a hypothetical, threatening gun situation. XPD, palladium. So yeah, it did end up getting back above the 200 exponential and simple. Hard buy. It looks okay here. It really does. I mean, this thing's just been so freaking volatile. It looks okay. What you don't want to see is it top out right here around like 77,591. Oh, my bad. I might have pulled up. We're looking at kilos. It gets same thing though. Same thing though. You get the point. But if you're looking for a kilo of that XPD, if you know what I'm saying, that palladium, that's your one right there. XPT, platinum, 988, broke down below 200 exponential and simple, trying to get that hard buy signal. Guys, this still doesn't look particularly great on the daily, but when we go out to the monthly, oh man, that did turn into a pretty gross rejection. Yeah, that looks bad. I really don't like platinum here. I mean, everything looks good. Metal-wise, like this cycle, with the exception of platinum and silver. I mean, silver even did okay. Platinum is just horrendous. Yeah, I wouldn't even mess with it. I really wouldn't. There's no reason to. There's a million other things that look better. And even ones that look better and are equally or more undervalued. All right, so now we're going to talk about pot stocks and why it's so important to take profits. These things are just melting down to our entry levels again. So if you didn't lock in gains, you basically just gave back like 20% on all these things. Some even more. Same thing on YOLO. I'm still not even convinced these things have bottomed. I think this is literally just a bunch of bullish divergence playing out. And the reason that we diversify between these is, we'll see in a second, some of these have severely underperformed. Most of them went like 20%, which is great. Others went like 50%, which is why we don't want to just pick one and that's the one. Because even if it's the best company, doesn't mean it's the best stock. Even if it's the best stock, it doesn't mean it has the best move. So Tilray performed phenomenally, shot up over, 50%. That was our target, take profit. And then, I told you guys I wasn't going to get greedy on this when I was taking profits. And we've literally gotten rejected right here. And now, granted, it's still way up. If you're in the trade, it's not like terrible. But you just gave back 11% for nothing. So, in my opinion, always better to lock in profits. If this comes, I mean, it basically filled the gap on this wick right here. But if it came back and found support at $7.17, I would be much more bullish on this. I do still have part of the position open. Stop loss back to break even, or if you're just building a position. But I treated this just like a scalp play for now. Same thing with Hexo, completely melted back down. So it shot up over 25%, and then it's right back at the entry price again. I mean, that's profits 101. Sundial, this thing blew up here. Reclaim the 200 exponential and simple arguably is the best on the daily. Now, it's also low market cap, doesn't make any money. It did have earnings come in. Surprise was 100% over the estimate. So it reported break even, and it was estimating -3. So congratulations. Congratulations on not making any money. But you're expecting to lose it. And then revenue came in about 8% up, 1 million over. I mean, that's actually It's actually not that bad. Let's look into this a little bit more while we're here. We've been ripping through these pretty good. We're making good time. Yeah, okay. I mean, you can't be mad at that. I mean, they basically in 2019 had 393 million in assets and 222 million in liabilities. So the debt to asset ratio was 56%. And then in 2020, they had 231 million in assets and 19 million in liabilities. So they basically sold off a bunch of assets, shored up their balance sheet, took care of their liabilities. Now the debt to asset ratio is 8.5 to 1, or 8.5% rather. And then on top of that, I mean, they're basically not missing. I mean, they're beating, but not really, but they're not missing. So that's definitely a good sign. I mean, they're not big, but they're not tiny. I mean, they are tiny though. 1.41 billion. I mean, it is a. I mean, realistically, it's just starting to look decent. I mean, and a lot of these pot stocks are looking like this too. And the book value is a little higher than some of the other ones we've been looking at, but yeah, I mean, 1.4 billion. Mm. The revenue's down. Yeah, I don't know about this one. I mean, it's not bad. It's looking better. I wouldn't get overly bullish on this thing just yet, though, to tell you the truth. CGC, same thing. Had a nice run up here. You know, hit our first target. Didn't even come close to the second. So maybe it comes down here, puts in that inverted head and shoulders, and then we get a nice move up. It's just melting down, though. Got to just be careful not locking in gains on these things. Now, again, if a year or two from now, are these all going to be much higher, in my opinion, or going to be lower? I think they're going to be much higher in a year, 2 years, 3 years, 5 years. But it doesn't mean we can't have another 50% drawdown. And then Cameco did come up here and revisit the highs. The measure move has played out. The 200 exponential is getting ready to cross back above the 200 simple. And it looks like we're going to our target. It looks like we're headed up here to 33.59. So that's another 10% to the upside. Looks like it's losing a little strength. But when we go to the longer time frames, I mean, this looks juicy. The weekly looks strong. Looks like it's going up to the target. And the monthly looks strong. Man, is this going to end up printing some like monthly divergence? It probably is. Really just need to see some serious continuation. If this pushes up here to 786 and starts selling off, it's probably going to look like some divergence. And then we're going to see it come back down. And then honestly, at like 21, I'm loading back up again. 21, 22. Yeah, I mean, uranium there's just such a strong narrative for it right now. It's hard not to be bullish on the space. So, and people, even like the tree hugger, green, woke crowd is like starting to talk about like, well, actually, nuclear power is not so bad. So maybe some nuclear reactors aren't such a bad thing. So when you hear those retards talking about something, after basically like swearing nuclear is like the worst thing in the world and it's horrible and all this stuff, I mean, the narrative could really shift. And that's basically what it is. It's basically like a FUD campaign for like 30 years on nuclear power. So could really see a shift here. So yeah, I think that's going to do it. Appreciate everybody that tuned in today. Got through quite a bit of data in quite a nice amount of time. Actually kept it under 2 hours for once. We're at 140 right now. Appreciate everybody in the group showing their support and making our third weekly stream a possibility. So if you are not familiar with the schedule, live every single Sunday at 8 p.m. till 10 p.m. Eastern Standard Time, every single Wednesday from 8 p.m. till 10 p.m. Eastern Standard Time, and of course every Friday with our weekly stock market wrap up. And looking forward into the crypto market, we've got our 11 a.m. till 1, sometimes 2 p.m. stream as well. So if you have asset requests, you can make them at the beginning of the stream or in the group as well. Definitely appreciate each and every one of you for tuning in. Make sure to like, subscribe, share, all that good stuff. And I think that's going to do it for today. It is 9:43 p.m. Eastern Standard Time on April 3rd, 2022. This is our Sunday evening market look ahead. I am Crypto Trend Trader. Thank you, Triple Dumps. Appreciate you as always. Thanks for your support. And I'm out of here. Peace.